So welcome you all once again to today's section. Today we are going to look at for the cost volume profit analysis. So that is the topic. We call it cost volume profit analysis. I like that analysis. Traditionally, we call it break-even analysis, or we call it break-even analysis, right? That is the chapter. It is one of the interesting sections. I'll go straight to the point, and when we use a full lecture video, you get a full concept in there. Now, when you talk about break-even analysis or cost volume, first of all, let me touch something small about the volume. Volume in management studies means quantity or unit or output. So either the units or quantity. So volume of sales, so that's the quantity of sales, or output. Good. Now, so CVP analysis simple means analyzing the effect of changes in the output on costs, revenue, and profit. So let me take it again. CVP analysis simple means we are analyzing the changes. So number one, we are analyzing the changes in what? Outputs. In outputs. Number two, it effect on the following variables: cost, revenue, and finally our profit and profits. How do you get that? So when someone is analyzing the changes in outputs, its effect on cost, revenue, and profit, that person is conducting what you call CVP analysis. So as the name suggests, C, cost is here, profit here. Their relationship is on what? Revenue. Good. So that's their senior boss, that's revenue. Because if I take cost from revenue, I'll get profit. So changes in the volume of the output, its effect on cost and profits. That is the CVP analysis. I personally call it what if. So I also call it what if analysis. What if analysis. What if analysis. It explains the question of what if. So like, what if we produce 2,000 units? When we produce 2,000 units, what will be our sales revenue? Oh, maybe sales revenue will be 40,000. Okay, that's fine. What will be our cost? Our cost will be around 35,000. What will be our profit? Oh, 5,000. What if we produce 3,500? What will be? What if we produce 6,000? What if we produce 7,000? So your paper or your exam question, your examiner will be moving you through variables or through outputs. What if they produce 6,000? What will be the effect on profit? What if they produce 10,000? What's the effect on profits? That is the game, and that is the question, and that's how they will structure the question. So in summary, CVP analysis simple means we're analyzing the changes in output, its effect on what? Our revenues and costs. That's all. We are done. And then we also went through some basic formula. And we said that the CVP we can have for single product and then what? Multi-product. we went through the assumptions. CVP come with a lot of what? Assumptions. So we went through all the assumptions and then we look at the formulas. So we will just scan through the assumptions, although you can get the full version or the full picture in the full lecture video. Great. We went through some number of what assumptions. The assumptions before we come out with the break-even analysis, we have to assume a whole lot.
Oh, and I was thinking, if me, I can't go and you wait until the time.
So let's look at the assumptions. So assumptions. Assumptions. We have to make several theories to explain the principles of what throughput. Sorry, the break-even or the CVP analysis. The reason is this: the assumptions or the theories usually move with throughput, and assumptions move with the break-even. So let's take note. The first assumption is that production must be equal to sales. So production, it assumes that production is equal to sales. In simple code, no closing inventory. You keep no closing inventory. That is all. So no closing inventory. So please and please again, in exams, if you see that the examiner asks you, tell us the limitations of break-even analysis. Don't worry yourself. Just quote the same assumption and then tell the examiner that in reality it is not true. In fact, in reality, none of the assumption is true.
What is it advantage?
Now, friend in person is asking a question that what about advantages and uses? That was the question advance, and that question is still pending. It's in question one. Yes. So that is it. So that one I'll not come to it. Important uses, objective purpose of break-even analysis. That one still pending. So let me go on. So if you quote the assumption and they ask for limitation, tell the examiner that it's assumed that production is equal to sales. But that's not the case always. So does it mean that businesses does not keep closing inventory? No, in reality, most companies keep closing inventory. So that's why we are saying it's not true. That's a limitation. Great. Let's quickly scan through the assumption. Assumption two, it also assumes that the company produces and sells only one product. So the company produce only what? One product. Is that true? In reality? Or in events where the company produce multi-products, the sales mix is constant. So, or in multi-product, the sales mix is what? Constant. Or what you are saying is this first assumption. They assume that the company produces and sells just one product, which in reality is not true. Companies produce more than one product. Just mention any company that produces just single product. You get few. Most company produces more than two, just for diversification. Good. Or in event where you produce multi-product, the sales mix must be constant. Let's assume that you produce. Let's assume that you produce marker and then uh, Duster. So the mix will be like this. Anytime we dispose of 4 markers, just one duster must move. Must move. Right. And this will be constant. So if you dispose of 1 marker, then you have to wait to sell 4. Sorry, if you dispose of 1 duster, you have to wait to sell off 4 markers before you can sell another duster again. In reality, that's not true. The consumers will determine what they will buy. Great. Great. So in short, if the company produces multi-products, the sales mix is constant at all period. So like we do the illustration. Anytime a duster moves, 4 markers have to move before the next duster. In which in reality this might not hold. That is, let's move on to the assumption 3 quickly. It also assumes that a selling price and the variable cost per unit is constant or remains constant at all level of activity. So the selling price and variable cost remains what? Constant at all level of activity. They are just saying that in period 1 or year 1, if your selling price is 25 cedis, in the next year or period 2, it must also be what? 25. Is that true in reality? No. In reality, due to inflation, selling price could move down or up. That is all. Variable cost do the same thing. They say variable cost must be constant, but in reality, it's not true. Yes. Now let's go to the point 4. It also assumes that the fixed cost remains constant at all level of activity or the period. The fixed cost is what? Constant. This point 2 is not true in reality. Now fixed cost could change or increase, which we have what you call the step up cost. Great. Then assumption 5. Assumption 5, that one we will combine assumption 3 and 4 together to get assumption 5. So let me bring assumption 5. We'll move up to probably, we got like let's say 6 or 7 to quickly move on with the summary. Assumption 5, it assumes that cost can be classified into 2. Cost can only be classified into 2. They are variable and fixed. This assumption 2 is not always the case. Some of the costs are what? Semi-variable. Semi-variable. Some of the costs are also what? Step up. So step up cost. So you should take notes. In reality, it's not true. Assumption 6. It assumes that there is a linear relationship. Yes, they are in good terms. Linear relationship between what? Between costs, revenue, and output. So there's a linear relationship. When your output increases, it will have a linear impact on your cost and your revenue. Good. So given some equation like y is equal to A plus bx linear equation. In reality, it's not true. Some of the relationship are not linear. You can have what you call curvilinear, quadratic, and other functions. Let's look at the last assumption or the last theories. That's number 7. It also assumes that past information will provide a reliable guide in future. Wow. That means history will repeat itself. So past information will provide a reliable guide into the future or in the future period. So past information will provide a reliable guide. That's assumption 7. Now this assumption is not true. So it suggests that what is happening currently might repeat itself tomorrow. We provide a guide that okay, tomorrow will be okay, tomorrow will be fine. But in period of what uncertainties in economy where things are not stable, this assumption will not hold. So that's why I'm saying that in reality, some of the environment or the economy are dynamic. They are not in what you call stable. Like let's say for 5 years, things will be stable. Yes, some of the economy for let's say 5 years, they will have a stable prices. But some part of the economy too, in fact, less than 2 months, they can have changes, a lot of changes. That is it. So you are done with the assumptions. So like I said, anywhere they ask you that tell us the limitations of the break-even analysis, tell them that it's not true. The same question was asked in November 2015 for 5 marks, and that was very fantastic. This time around, we'll put our question into application section. So let's take note. Now we are done with the assumptions. Your trial work will be this. This is your trial work. Is the question is a question 1. Let me project that 1. So question 1 of the material is what you are trying for me. I need to discuss the main objectives of CVP analysis. Then that's what I'm looking for. And then the C, briefly discuss the importance or the uses and the limitations of CVP analysis. Good. Okay. Now let's pick the question 2 to familiar ourselves with the break-even. We said that your exam question will be like this. 1, we have for single products. They will ask you to perform a calculation on break-even in a situation where the company produces and sells just one product. Number 2, they can also ask you to do for multi-products. Multi-products, good. And then number 3, if they give us chance, we'll add other ones, any angle. Yes. So, but let's concentrate on these 2, and then we are done. So I'll pick question 2 to just remind ourselves about the formulas. So I use question 2 to go through all the formulas for you. And then I've also provided the formulas. So let's start. First, we have what we call break-even point. So A, I believe that's what the question will ask us to do. When you talk about break-even point, it is the point at which total revenue is equal to what? Total cost. For that matter, profit is equal to 0. That is it. So break even is a point where the company makes neither profit or loss. Good. So that is it. Now the first formula that we look at for, or when they ask for a point, for those of us that have done mathematics before, when they ask for a point on a plane geometry, so it means that point should have a two coordinates, x and y. That is all. So break-even point should have two variables. We have one break-even units. So they can ask you to calculate what you call break-even units. The formula is equal to your fixed cost all divided by your contribution per unit. That is all. So let's just look at it from this question and solve it. Then the second one, we will call it break-even sales value. They make the point. So break-even sales value, not unit, but this time around is value. Is equal to, for now, it's equal to break-even unit times the selling price. That is all. So that's the first formula that. So now watch the wording of the requirement carefully. If the examiner said, calculate the break-even point for the organization, point means there must be two coordinates. That's the unit and then the value. Like the examiner said, break-even unit or break-even sales unit. Once there's unit, you earn it here. Or break-even sales value. When there's value, come and then earn it here. That is all. So I'm using this illustration. Let's look at this particular illustration. Question 2. The following data relate to product PQ. Selling price is 25 per unit. Variable cost is 20. Fixed costs are 50,000. What is the contribution per unit? So therefore, contribution will be what? 5 cities per unit, right? Good. So that's the selling price minus the variable cost. Contribution simple means the selling price minus what? The variable cost. Okay. The fixed cost is 50,000. So they say calculate the number of units that must be made and sold in order to break even. They say number of what units. So they're just looking for the break even units. So the first part is break even units. Second, calculate the break even point again. This time expressed in terms of what? Sales revenue. So that's sales revenue. Okay. So let's calculate this. So now let's just do substitution in the formula, then we are free to go. So first, fixed cost from this person is what? 50,000. What is the contribution? Selling price is what? 50, that is 25 minus what? 20. So that will give us 50,000 over what? Over 5. What's the break-even unit? Therefore, the break-even unit is what? 10,000 units. So it simple means when organization produces 10,000, they will not get any profit. Their profit will be what? Zero. Their profit will be zero. That is the indication. That is what it talks about. Okay. Now, what about the break-even value? Now, the break-even value, we said I just multiply the unit by what? The selling price. What will be the revenue to break even? So just pick this and multiply by the selling price. So you code the formula first. That break even sales revenue. The examiner said revenue. Please no shortcut to break even sales revenue is equal to the break even unit break-even unit times the selling price. So let's do substitution here. So you get something like 10,000 times 25 Ghana cedis. So that would be 25,000, right? Or 250,000. 250,000, eh? Okay, so that's 250,000. I'll take that. 250,000.
Connected.
Sorry. Let's look at the next one. Let's look at what you call unit required to earn a target profit. So we can ask you that, okay, now this is a break even 10,000. The company wants a target profit of, let's say, 20,000 Ghana cedis. What should be the unit that I have to produce? So the question will start like this: B, unit or revenue? Revenue required to earn a target or a required margin, a desired margin. So the word target can also mean required. Required or desired or expected. So the examiner will use any of these. You just have to pick one. And last thing, for instance, it was there. Yes, there was question like this in the last sittings on. Okay. Okay, so let's continue the game. So all of them, let's use one. To earn a target profit. That's all. So now that we know that when we produce 10,000, our profit will be what? Equals to 0. Okay, now we want a profit of, let's say, 5,000. What should be the unit? Or what should be the sales revenue? Don't forget that we said that this chapter is what if analysis. What if we want profit of 5,000? What will be the unit? That is all. So this is a pure analytical section. So that one, the formula will be like this. Just put the formula like this. Tell the examiner that still it is the fixed cost. If you are looking for the unit required will be the fixed cost plus your target profit, all divided by first your contribution per unit. That is all. They've asked this question 3 consecutive times. It's very interesting area. Yeah. Extremely interesting. Good. So that is it. Now let's see. Now, when the question is being given, we just have to look for this item from the question. So let's see this question, and when I'm done, I will explain some few points again. Now, look at C. Calculate the level of activity that is required to generate a profit of 40,000 Ghana cedis. So what will be the level of activity? That is the unit. They are looking for the unit. You can also go further to find for what? The revenue by multiplying the final answer, the unit by what? The selling price. That is all. Okay. So let's substitute this. What is the fixed cost here? The fixed cost is 50,000 cities. Their target profit is 40,000. So in all, they are getting 90,000. But their contribution per unit is what? 5 cities. So therefore, what will be the unit required? So 90,000 divided by 5. Any answer for me, friends online? So you get 18,000 to be the answer. So 18,000 units. We are done. So now, what if we are looking for the sales revenue? So what will be the sales revenue at this level? The sales required. So this is the unit required, 18,000. So tell the examiner that this answer, 18,000 multiplying by what? Selling price of what? 25 to give us what? The revenue. You put it down for the examiner. That is all. But here he was looking for the unit. That is all. Okay. Now let me go further. Yes, as usual. Let me go further about this. Have you seen this profit that we have here? If the examiner does not bring issues of tax inside, don't worry yourself. But as immediately the examiner introduced tax in the question, this profit must be profit before tax. It must be the controllable profit. Tax is not controllable. No entity have control over a tax. So we are not interested in tax. We are interested in figures that we have full control over. So if you are doing short-term decision making techniques, all fixed costs are what? Irrelevant. And then we are interested in things that you have control. If you like, manage it or maneuver your way through the tax authority, but you cannot determine your final tax that you'll be paying. No, we don't have control. So we have to pick the profit before tax. So let me just assume, the same question, we are solving it again. I'm just assuming that the examiner said profit after tax of 40,000. If the tax rate is 25%, then it means that we have to convert. We have to convert this profit after tax into what? Profit before. Can you try for me? The profit after tax is 40,000. The tax rate is 25. What will be the profit after tax? So profit before tax will be profit before tax is equal to question mark. Any answer for me? How do you determine it? So I'll provide several ways. In short, we are interested in profit before tax. So all what you have to do is this profit after tax, it represents net of tax. If the tax is 25, then net of tax will be what? 75. So therefore, if 75% is equal to 40,000, then the before tax is 100%. So therefore, 100% will be what? Question mark. We don't know. Then we start solving. Good. I like that too. Somebody have even provided a marking scheme. I like the scheme. Yes, I like that. And it had final answer of what? 50,000. That's perfect. Now let's see. So first, you can also tell us that I'll provide this short technique. What are you looking for? I'm looking for 100%, right? The third exam, I'm looking for 100%. Bring it. What do you have? I have the 75%, so divide by 75%. Now multiply it by what you have, the monetary value, 40,000. And that's the answer. Good. And that'll give us so 53,000, 333,333. Okay. So the first marking scheme has been reviewed. So 533333, that's one style that you can use. Or shortcutting, like shortcut version. I'll insert that one in the formula. I will insert that one in the formula. I will insert that one in the formula. Okay. So if I should continue, use that the profit before tax is 53,333. You can confirm that and see if it's true. You can confirm that here. Your profit before tax is what? 53,000. What is your tax? Find 25% of this figure for me. 25% of this. This is 53,333. So 25%. That should give us 13,333. You take it off, profit after tax of what? 40,000. Confirmed. Yeah. Confirmed, right? Perfect. Now let's go to the shortcut. And I'll put it in the formula. So now anytime there's issue of tax, now we change the formula slightly. So the unit will be the fixed cost plus this time around the target profit all divided by 1 minus the tax rate. So the 53,000 that we calculated, we can also get that by saying that the 40,000 divided by 1 minus what? 0.25, the tax rate. To also give us 53,000. That's a shortcut. So if you want to get a profit before tax, don't worry yourself. Just divide it by 1 minus the tax rate to give you the answer straightforward. That is all. So you do your substitution in here to determine the unit produced. Now, because these figures are so easy and the formula is so straightforward, like a formula work, because this one you have captured any way they ask you can produce it for them. So we have to trouble you on how to arrive at these figures. The format that you know it, you can code it for us. But how to get the figures and put them in and get the final answer correct is the issue. Now that we are just learning the formulas, very soon we start going through the series of exam questions to look for how we can be able to determine these values. So now let's quickly finish it up. Fixed cost is 50,000 plus 40,000 divided by 1 minus 0.25, which is 53,000, all divided by 5. And answer will be, so this one will be more than 18,000. So that will be 103 divided by 5. So to be 20,000 going. 20,000 plenty 6. Okay, so that's the answer. So 667, right? So 20,667. That is perfect. 20,667. Okay, so that's all. I'm done with the unit required to earn a target profit. So we are continuing the summary. The next item is what you call margin of safety. So that's the next one that we will ask you to do for us. So let me show you. I feel it there. Sorry, I want us to continue. Now the next section is margin of safety. Margin of safety. Margin of safety. Now the issue is that let's assume that you are production manager. When you produce unit is here. Profit. When we produce 10,000, our profit is equal to 0. So now you are the production manager and you have control over the production unit. And then they've asked you to prepare a budget. Are you going to budget for more than 10,000 or below 10,000? Any answer? More than 10,000 or less than 10,000? More than 10,000. More than 10,000. Okay. Yes. Okay, so let's give me any idea, any figure that you budget. Okay, let's say you budget for 12,000 units. They should produce 12,000 because if you budget for less than 10,000, you get loss. This is the loss area and this is the profit area. Okay. So you realize that this is the budget. This you call it what? Budget. And then this one is what? This side is what? The break even. Okay. So you've added 2,000 units, right? We call it safety. Margin of what? Safety. You added 2,000 in addition to that of the break-even unit of 10,000. So the 2,000 that you've added is called margin of what? Safety. In event where something else happened, you can still break even and you are fine. Because if it's okay, I'll be efficient and effective. So let me go in for 10,000. No. No. I run at loss. So that is it. So in short, the point I want to establish here is that the margin of safety is nothing but the difference between the budget and the break even. That's all. So anytime budget minus the break even will give us what? The safety that you have added. That is all. I'm done. We can express this in three folds. So I'll write them on the board. Let me dust and then bring the formulas. Still, we are in a summary of single product. So we have it in three folds. We have it in units, so margin of safety in terms of units. We have it margin of safety in terms of value or sales value. And finally, margin of safety in terms of what? Or as a percentage. That is all. So these are the three levels that they can ask you to calculate. So let's start. In units, as we said, it's nothing but what? Budget. Your budgeted unit minus break-even unit. So let's go to this question and see if we can get a nice illustration there to probably test our pulse. If we continue, there's a D part, but that D not come. So this one is the D part. The company budget to sell 13,000 units of product PQ. Calculate the margin of safety. 1, in terms of what? Units. 2, in terms of value and as a percentage. So let's start the game. So in terms of units, how do you get it? The budgeted unit is what? 13,000. What's the break-even unit? 10,000. So therefore, margin of safety in terms of unit is what? 3,000, right? Yeah. So it's nothing by 13,000 units minus the 10,000. You can just finish minus the 10,000. So therefore, it's equal to 3,000 units. That is all. How we get it? Okay. Now let's go to the value. Anytime we're asking for value, just pick the unit version and multiply by what? Selling price. So you can just multiply. To take example, the margin of safety in terms of unit times the selling price for now. So 3,000 times Ghana city of 25. That should give us what? 75,000. Perfect. I like the answer. So which is equal to 75,000 cities. Let's go to as a percentage. Margin of safety as a percentage. Tell the examiner that originally the formula is like this. The budgeted unit minus break-even unit all divided by the budgeted unit. Okay, all divided by the budgeted unit or the budgeted unit. Now, can I rewrite it again because budgeted unit minus break-even unit, it should give us margin of safety unit. So I can rewrite again and say that okay, it's margin of safety in terms of unit, all divided by what? Budget unit times 100. In fact, the final answer we multiply by 100. That is all. So let's see how best we can look for this too. Great. Now, the margin of safety in terms of unit is 3,000. So we can just pick the 3,000 divided by budget of 13,000 times 100, and that will give us, so the percentage that you've added, the percentage added. Good. So what is the percent? 23%, right? Okay. Answer is equal to 23%. Good. So that is it. Now, if you calculate break-even unit plus the margin of safety, is always equal to the budget. So if the margin of safety is 23, budget is always 100%. What will be the break-even? This section is very important. No book or no note will tell you this, but these are the questions that we will ask you in the exams. Okay, let's do the analysis again. Here we are saying that the break-even unit plus the margin of safety should be equal to the budget. That's all. Because our break-even unit is what? 10,000. We added a safety of 3,000 to it. Now we are getting a budgeted unit of what? 13,000. With this 3,000, what's the percentage? It represents 23%, right? So therefore, this one will be what? 70. So 77%. Then the budget will be what? 100%. 100% like this. This analysis should not depart from you. It must be with you day in and day out. That is all. But there's a question that you are going to do right now for a trial test, which you need this analysis. That's why I've written it boldly, so that when I read there, you'll be fine. Okay, so that is it. I'll do last item and resume into question solving. But if you do have any question, kindly ask. So some few questions before I do the final aspect of the single product. Still, we are looking at the summary. So question time, let's look at the last item, which is called CS ratio. Very important, extremely important, CS ratio. Extremely important, CS ratio. So we call it contribution to sales ratio. To sales ratio. Or that That is the CS ratio, or we also call it profit volume ratio. What will be the shortcut? PV ratio. So PV ratio. Yeah, the same thing. Let's move it from this angle. CS ratio, what will be the formula? If contribution per sales, so like this, is contribution to sales. So then it should be what? The contribution over sales times 100. That is all. It is contribution over sales times what? 100. That's the CS ratio. Please and please again, you can have contribution per unit. So it can be contribution per unit over the selling price times 100. It can also be total contribution over total what? Sales times 100. So you cannot pick contribution per unit and come and pick total sales. No, mismatch. So take note of that. So that is it. Now this one will help us. So let's calculate it and see. And now let's just exercise one use of it. And then we move on and zoom into what? Question solving. Okay. So let's do this. On the below. So let's solve for this particular question. So let's go in there. We know it. The selling price is 25. Variable cost is what? The variable cost happen to be 20. So contribution is what? 5, right? So therefore, CS ratio will be 5 out of what? 25 times what? 100. Any answer for us? CS ratio will be 20%. Okay, that's great. 20%. I'll take that. So CS ratio is equal to 20%. Okay, so that's 20%. CS ratio is 20%. Now, if you calculate CS ratio and get 20%, you should be able to understand these variables into detail. Why? But the question that we will ask you, it requires in-depth analysis. So if your CS ratio is 20%, what does it imply? It implies that for every 100 Ghana cedi sales, your contribution is what? 20 cedis. So tell us that the variable cost will be what? The other percentage, that's the 80. So if the CS ratio, in short, is 20, your variable cost to sales will be what? 80%. If the CS ratio is 25, the variable cost to sales ratio will be what? 75, in that order. Because a time will come, they will ask you for variable cost, but instead they will give you CS ratio. So you have to take what? The inverse, the opposite, to work it out. It has come several times. It came November 2012, question 5. It was there. Okay, so that is it. Now let's see the game. Now you can even confirm this. The variable cost to sales ratio is 80. Take the variable cost 20 divided by 25 times 100. You get the same 80. But in those questions, we will not make this information available so that you can easily calculate it. No. The only information that we can make it available to you is this 20%. So you have to know that once the CS ratio is 20%, the variable cost represents what? 80. So in short, have you seen? Let's do some percentage here. For those of you who have done financial reporting, you came across what we call a common size, right? So let's do some common analysis here, or common size analysis. The sales is always 100%. Variable cost here is 80%. So contribution will be what? The 20%. That is it. So that is what we are talking about. That is all. Now we are done calculating the contribution or the CS ratio. We said that we can also use that one to analyze what? The variable cost. Second uses, Now we can use this CS ratio to cap it for the break-even sales value. So let's go back again and cap it for the break-even sales value. Another formula for the break-even sales value. So another formula for break-even sales value. No shortcut, no shortcut in exams. Is equal to the fixed cost over the CS ratio. We should get the same answer. What is the fixed cost here? Still 50,000. What's the CS ratio? 0.2. So therefore, the answer will be 250,000, which was the same as what we had, right? So can you confirm if it's the same as the first one? It must be the same. Agreed. I hope everybody get it right. Okay. So if everybody get it and everybody understand, or like everybody gets what you've done correctly, then it is my turn to ask question. We are done with the first phase of the single product. These are all the formulas that we have for single products. It's the first phase. One, 11 analysis. Two, and how to derive this fixed cost by yourself. Okay. So we are trying question number 3. Start work. Question 3. We are using 3 minutes. It's question 3. We are using 3 minutes. The 3 will be inside. Everything 3, 3, 3. So just 3 minutes. So this is the requirement. Requirement is required. Calculate the budgeted fixed cost in period 3. You find the budgeted fixed cost. So let's start work. Now let's work together. I hope you pause the video. Okay. Now they say we should find for budgeted fixed cost, whether actual fixed cost, budgeted fixed cost. In this case, they are just one. So fixed cost. They are looking for fixed cost. Now, quote any formula that have fixed cost in it and make the fixed cost the subject. That's all. So any formula at all. Now you have two formulas that have fixed cost. Can you give it to me? Two formulas that have fixed cost. Number one, how do you find break-even units? So break-even was units. Break-even units is equal to fixed cost over what? Contribution per unit. Okay, that's the first one. Number two, break-even sales value. So break-even value. Break-even value. That one is equal to fixed cost over what? CS ratio. Any of these, you get the same answer. Make the fixed cost the subject. What do you get? So try for me. Fixed cost the subject. If you make the fixed cost the subject, what do you get? Now, these are the questions that I see you like asking in exam. That you be looking for the alternative. Yes. No, it's not in any book, not in any syllabus. Not at all. So we have to like these questions. So I'll take the first one. So in the first one, if I should make the fixed cost the subject, I just have to multiply by this one, right? So it should be equal to the contribution per unit times the break-even unit is equal to what? The fixed cost. That's the first formula. You get the same answer. This one is equal to the CS ratio times break-even what? Value. Now it's equal to the same fixed cost, right? Okay. Okay. So let's pick one. I'll pick the first one and do it. One of them, I'm going to pick the second one and do it. All of them give the same answer. So that means with the first one, I have to look for what? Contribution per unit versus what? Break-even unit. That's all. So let's go to the question. When I go to the question, I'm going straight to pick out for contribution per unit and break-even per unit. That is all. So let's see. So let's read the question together. The target publication provides a single service to its customers. Analysis of its budget for the year ending 31st December 2017 shows that in period 3, when budgeted activity was 6570. So now we have the budget. Fine. 6,570 service units with a sale value of what? 72 cedis each. And the margin of safety is what? 21.015%. We said that if the margin of safety is 21, then the break-even unit must be what? The other half. So it's the same as you doing something like this and someone did it there. I'm so happy. If the margin of safety is equal to 20%, oh, then that means the break-even is what? 80. How do you get the 80? It's the same as 1 minus the margin of safety. So 1 minus 0.2, which is equal to 0.8. That is all. So here, if you want to find the budgeted unit, then we are done. Oh, so the budgeted unit is nothing by we doing this and then multiply the answer by what? By the budget. You get to what? The break-even unit. Where you say we should find for the break-even unit and the contribution per unit. So that is it. So let's quickly find for the break-even unit. So let's see break-even unit. So let me put another formula again. So therefore, the break-even unit is equal to 1 minus the margin of safety times the budgeted unit. That is all. Which is equal to 1 minus 0.2015. That is 2015. Okay. Times the budget. The budget is 6570. Any answer for us? So this answer is the break-even. Now let's go and look for the contribution per unit. Got it then. I never presented it with one. Okay, so let's see. It's going to state that the budgeted contribution to sales ratio of the service is 35. The CS ratio is 35. The selling price is 70. What is the contribution per unit? Now, how do you find contribution per unit? The CS ratio. Or how do you find it? How do you find CS ratio? It's equal to contribution per unit over selling price, right? Okay. Now you're looking for the contribution per unit. We know the CS ratio to be 35%. It's equal to contribution per unit, we don't know. All divided by selling price. The selling price is 72 Ghana cedis. So in short, if you multiply the selling price by the contribution to sales ratio, it will give you what? Contribution per unit. Okay. So in short, what you have to do is we just have to now to get the contribution per unit is equal to the selling price times the CS ratio. That is all. Which is equal to 72 times 35%. So finally, multiply these two answers together. You are done. So, in effect, the budgeted fixed cost for that period will be, can you get us the final answer at each level? Final answer here, final answer here, then you multiply them. So final answer here is what? 25.2, right? Okay. What about the final answer at the top there? 5,1 5187, right? 5187. Okay, I'll take that. So finally, what is the friends online? Kindly confirm for me. A third person should confirm whether you are getting 5187. Ideally, it should be less than the 5187. So therefore, the fixed cost is equal to contribution per unit 25.2 times. I hope the 5187 is correct. 5189. 81 or 87. 89 and 87. Okay. So here is 021015. Wow. Oh, okay. So that is it. So it's 89. Good. So it's 89. So finally, for the first cost, multiplying these answers together, then you get a first cost. This section is highly analytical. So it's one of the interesting sections. So get 130,000. What? 770, right? Okay, so that is it. Okay, so we are done with this particular question. Let's continue question 7. Okay, so the next question now solve is, let's move straight to question 4 before I come back to question 3B, Abbeville. That's November or the May 2012 one. Okay, you are trying question 4. You are trying question 4. Okay, question 4 is yours. So question 4. And just 2 minutes. We are still at the entry stage. Look at the things small. Gradually, you enter into the terrible sections. So we have to go through this before we enter into the terrible sections. Question number 4. That is what we are doing now. Question 4. Everyone online. The answer is 3,000. The question says that how many units should be produced and sold to earn a profit of 5,000, right? So what are they looking for? They're looking for required units. Required units. They didn't bring issue of tax here, so we shouldn't worry ourselves with the tax. Even though last time the question that the examiner asked, there was tax inside. It was the same scenario, but there was tax in. So take note of that. I don't know why most examiners like this area. You need to require to produce a target profit of, if there's a tax rate of this. Okay, now they say the following data relate to a manufacturing company. Okay, plant capacity 4,000 units per annum. So the whole year they can only produce what, 4,000. Present utilization, for 40%. So currently, even though the machine can produce 4,000, now they can produce only up to what, 40%, which is what, 1,600. Okay. Honestly speaking, we don't need this information to solve this question. So if you tackle this 4,000 and 40%, it's off. In management studies, overflow information is allowed. Now, Even before we continue, right after the requirement, I just put the formula and go straight to the question, look for it. If I go, they are giving me different information. I'll close my eyes and then pick what I need. Now, because so unit required. Sorry, so unit required will be is equal to my fixed cost plus target profit all about contribution per unit. That's all. So go to the question. What's the fixed cost? What's the target profit? What is the contribution per unit? Then put them together. Okay. I'm still waiting for my answer. We have to factor those ones in. Now let's see. They said the actual for the year were selling price 50 per unit, material cost is what 20 per unit, variable manufacturing cost is what 15 per unit, fixed cost is what 27. In order to improve capacity utilization, the following proposals are being considered. Reduce selling price by 10%. Spend additionally 3,000 on sales promotion. So in short, how do you calculate the new contribution? That means the selling price, which is 50 per unit, you have to reduce it by what? 10%. So just multiply 10% by 50, you get 5 CD. So the selling price must go down by what? 5 CD. So the new selling price will be what? 45. That's all. Or 90% of 50. That's the first thing that you do. Okay. So let's do. So new selling price. Into bracket 90% times what? 50. That will be Ghana city of 45. Okay, let's continue the game. Now, if the selling price has been reduced by 10%, have they changed the material cost? No. Have they changed the variable manufacturing cost? No. What about spend additionally the 3,000 on sales promotion? That is a fixed cost. You have to add that one to the fixed cost. That is all. So that one will not affect the variable cost, not affect the contribution. So the material cost is what? 20 per unit. And variable manufacturing cost. The issue is that most people selected the 15 as the variable cost without adding the material, right? Good. Material should be part of the variable cost. So, exactly. So what happened is this. They say material cost less material cost 20, right? Then variable manufacturing cost will be 15. What is the contribution per unit? Contribution per unit is what? 10. That is it. Perfect. So now let's do substitution. So therefore, the unit required will be fixed cost is what? Now the fixed cost will be 30,000. Agreed. It will be 27,000 plus the 3,000 is the fixed cost. What is the target profit? Target profit is 5,000. So add the 5,000 to it. So whatever be the target, add. Here there's no tax. So don't worry yourself by bringing tax issues. No. Don't cause trouble. So let's allow, unlike last thing where there's tax, and I believe strongly that if there's tax, you don't have to go by it. So the contribution 10. So therefore the unit must be what? 3,000 500 units. We are done. Okay. 3,500 units. We are done. Now, I wanted to prove some formula with some variables. So from here, I'll be fast and solve. I'll use a past question to do that. I'll use a past question to do that. Great. So we are done. Now there will be some questions coming. I have passed some 9 questions. Good. So when you get those questions, kindly try them. Try them. So you are trying agro-beso. So you are doing agro-beso. You are doing I am done question 2. Then when you are done, you do as if you are doing, you are not doing. Then you do Brahabeda hotels. Good. So now I'll upload it. So these are the questions. These are newly manufactured questions. So I will load it. Now, I'll put some items on the board. Then I want some few. You are going to solve a question. And then we need to understand some few points. Okay. Now, this is the same question that we solved. The very first question that we solved today, where our selling prices. So I will produce the same question again. Our selling price happened to be 25%. The variable cost happened to be 20. The fixed cost happened to be 50, right? Okay. Now, under the heading of under the heading of 8,000 units, the question is pregnant person. So 8,000, 10,000, 15,000, 8,000, 15,000. In fact, I don't do question the case. I don't question the case because it's not a time. No, I don't question the case. Let me go before. Let me start from 15,000 and 20,000. Produce the following. And 1, I need a sales revenue. I'll prepare the operating statement. I think when I add that, it will be fine. Prepare what we call operating word statement. Operating statement means we need sales, variable cost, your contribution, your fixed cost, your profit. That is what you're looking for. And then when you are done, you produce the following items for me. No, we are trying right now. Yes. As and when I'm writing, then you are also doing it. B, you are producing the CS ratio. You are producing the CS ratio for us. And then C, CS ratio, and then again, the margin of safety. Or this question is a pregnant question. C, also producing the break-even point, break-even under the heading of 15,000 and 20,000 units. So column by column. So I need 2 columns. That is how the question will be like. So when they produce 15,000, what is the operating statement? Yes, 15,000 and 20,000 units. What is the this item? We need a solution to be able to solve the question that I'm about to set. This is not the question. After you get me the solution of this, then we can now go ahead and set the question that we want. I just want you to understand something into detail. Okay. So I think this one is okay. So let's start producing them. So kindly copy the question, down the board and start producing them. Even though, you produce it for me, right? Let's do it together. Okay. I want us to observe social distancing. So that's why we have to do it individually. Do it together. Obviously. We are doing it together, like all of us are working together. So we should observe social distancing. Okay, so can I ask the board to work it out? Even though I need a solution of this one to set what a question. So have you seen that certain questions are an easy job? It's an easy job. Why answering is not an easy job? Okay, so can I dash the board? So can I dash the board? The same question that we solved, we are looking for. But the break-even point, we find it already. So now on CS ratio, we find it already. Margin of safety. But this one is 16,020. Okay, so let's work together. Come to dash the board. So let me dash the board and start work. I am interested in the A and then B because you stopped it already. So I'll not worry myself. I'll not worry myself. I'll not worry myself. So solution. Solution. That is done. Solution. Right here, when I produce 15,000 units, when I produce what? 20,000 units. Tell me the sales revenue. What's the sales revenue when you produce 15,000? Just multiply them by what? 25. Here is Ghana city of 375,000. And then 25 by 20, 500,000, right? I like these answers. Let's go to variable cost. But what are we finding? There must be operating cost on top. I'm doing the A part. Operating statement. Operating statement. Operating statement simple means the profit statement or the profit and loss or the income statement. It's your current income statement. What's the variable cost? So the variable cost is this one is 25 cities. This one is 20 cities, right? So 20 cities by this 300,000, right? We take it off. What about the other side? 400,000. Okay, so what is the contribution? Contribution is 75,000 and what? 100,000 respect. What is the fixed cost here? 50,000. We take it off. Here is 50,000, right? We take it off. What is the profit? The profit here is what? then 5,000. Here will be 50,000. And one more thing, I want one item from you. Can you find the total cost for me? What will be the total cost? We said that under break-even, cost can be classified only into what? Two, fixed and variable. Putting them together, we have the total cost. Great. Now, what's the total cost? Just add the fixed cost plus what? The variable cost. So at each section, total cost is equal to the fixed plus the variable. So the first one will be 50 plus 300. So 300 and what? Okay, so total cost is 350,000. This one is the note to account. Man account now note to the financial statement. And the next one is 450, right? Okay, 450,000. So you see, if they are making sales of what? 375 and total cost is 350, what's the profit? 25, right? If making a sales of 500 and then their total cost is 450, what's their profit? 50. Okay, that's fine. These are the information I need to set the question. Then what again do we need? We need the margin of safety, right? And I believe we can calculate that one. What will be the budgeted unit? So this will be the budgeted unit for the first period, first activity level, another budgeted unit. So that one you do it individually. The margin of safety for this section. For this question, what will be the break-even? We've already calculated it, right? To be 10,000 units. So here the margin of safety is what? 5,000 units, and here it is what? 5,000 units. So I want only two items. Find the margin of safety in terms of value and as a percentage. That's all. Then I'll now then we are done. Margin of safety in terms of units as a percentage. No, in terms of value. I need a value. So who can tell me? Okay, now let's see. What is the fixed cost here? 50,000, right? So fixed cost of 50,000. What was the contribution? What did we find? So what's the break-even unit? 10,000, right? And this is the one that we calculated first. The same person. The selling price was 25. Variable cost was 20. Making contribution of what? 5. Fixed cost is 50,000. So therefore, break-even unit is what? 10,000. So if I'm here, what is the margin of safety in terms of units? Just 5,000. Agreed. Then 5,000 times 25 will give us 125,000. So here I have 125,000. Okay. Again, over here, the break-even is 10,000, but the budget is 20. So the margin of safety is what? 10,000, the difference. Times the selling price of 25. So that will give us 250,000. That's perfect. So 250,000. That is all. Now keep these answers tight. You are going to ask a question. You have to work around it to get these answers. So that in the examiner will not produce the answers for you. Wow. And then we ask for the percentage. So for the percentage, you can copy the percentage for me. That's 33.33% and 50%. So for the percentage, this is 50%. And this is 33.33%. Okay. Now I'm going to type the board and set the actual question. I'm now going to set the actual. I need this answer to set the question. Okay. So I hope you have your answers. Okay, so let me capture my answer. Question. Okay, so that's it. That's it. Oh, sales. Okay, so we are done with the question. Start work. That is all. This is the question. No other information. That's all.
What are we playing?
Yes. Required. So let's write the comment here. Yes. Required. Number one. Yeah. I'm looking for a break-even point. And then margin of safety. Into bracket, the one that you can find. I. What again do we need? Find a fixed cost. Fixed cost. Even though the requirements go like this question, we have a particular point that you can solve. That is all. So this is the question. So we are done. Yes. Calculate the break-even point. Number two, margin of safety. And number three, the fixed cost. That is all. I am done. Start work. How do you solve question like this? How do you solve? No fixed cost. But if you find it. Fixed cost is it? Yes. So these are the questions that you have to expect in exams. Not too plenty, but it entails a lot of issues. So I'll look at this to end the game. Our time is a bit limited, so I think I'll solve it. I'll solve it fast. Fast. Okay, so here I'll not go by the requirement because you can't even get a fixed cost first. You have to get a CS ratio first. The CS ratio, you have to solve it first. So let's calculate the CS ratio first. That's the first thing that you can get. Questions like this. You are being given revenue and total cost. That's all. And these are the figures that we calculated from the question that we solved, right? That means you are going to produce all these answers back again from the old question. So let's see. First item, question like this. If you go questions like this, the first you can do is the CS ratio. A good examiner should ask for CS ratio first. That's a good examiner. Second, the fixed cost. But the terrible ones, they will not do that. Look at where they put the fixed cost. It's the CS ratio that we need first, so I can even add the CS ratio last, even though you need that one first. So in that case, that means you have to answer the question from the bottom and out, and that will be a challenge. So Let me start solving them and then get out here. First, we have to look for the CS ratio first. So that's the first now solve. CS ratio. How do you find CS ratio? Without it, we can solve this question. Any formula for CS ratio? We learned that CS ratio is equal to contribution over sales times what? We have sales, right? That's the revenue. Sales revenue is here, right? But do you have the contribution? No way. No, the CS ratio, no contribution. So that means this formula will not work. But you have to solve it. So it means that there's a second formula for CS ratio that I want to introduce to you and read this question as proof. It's equal to change in profit over change in what? Sales times 100. That's the CS ratio, the second formula for CS ratio. And this question dropped in 2012 May, question number 5B. Question 5B for 10 marks, 10 solid marks. Like this, they ask some four questions there for 10 marks. So imagine the one that you're going to answer. Also will come up with something new, something you've not seen before. That's one thing that we like about management accounting, because it's managerial. How you manage your affairs different from how some also manage his own. But the good news is that all of you achieve success. So that's the only good news. Unlike financial reporting, where they've drafted a format that it should go by. No, management accounting like that. Okay, so let's just plug in the figures. How do you get a profit? This is the revenue, this is the total cost, right? So let's find the profit. What's the profit here? So revenue, total revenue minus total cost. That will give us 25, right? Let this question now resolve it before. The same question now resolved now. 50,000, right? Agree. Okay, so that is it. Okay, someone should use high and low method. Okay, high and low. High and low method. I like that. High and low. Contribution is 70,000 profit. Okay, no, I'm reading different section. High and low. Okay, high and low, high and low. High and low method might not high and low might not work here, because with the high and low, we should have two variables. One, in fact, it's part of this topic. We will treat it. We should have something like units. With the high and low method, it will work well where there's what activity level, whether units or hours versus cost. That is where high and low work well. So this, because we don't have units, because we don't have the sales units here or the hours work here, but we have total cost, but we don't have hours. So high and low no work. Likewise, the contribution to sales ratio, contribution over sales to also work, because we have only revenue, we don't have contribution. The only one that will work, in fact, that year they were just asking for this formula, which was not in the book. So that is it. Now let's continue the game. So how do you get a change? Change simple means new minus old, right? That's a change, new minus old. So let's get the new profit. What's the new profit? 50,000 minus old profit, 25. So 50,000 minus 25,000, all divided by change in sales. That's the new sales minus old. How do you know that this one is new, this one is old? Check the years. Current, new, year, old, right? The new and then the old. Check the years. Or if they don't give you years, then you can now check what? Probably the revenue. So what is the new revenue? 500. Old is what? 375. Right. Okay. So the new sales will be 500,000, right? Minus the old sales, which is what? 375,000. So therefore, times 100, right? What's the CS ratio? So which is equal to 50 minus 25. That will be 25,000. Okay, so 25,000. 500 minus 375. That will give us 125, right? So all divided by 125,000. This answer times 100. What do you get? You have to get 20%. So first figure confirmed. Our CS ratio from the old question was what? 20%. So, and it was the same question that we produced these figures together to confirm this. Then the second one, after the CS ratio, the second item that you can find is the cost of sales. Sorry. But it's a fixed cost, not the cost of sales. The second item is the fixed cost. Let's go look for the fixed cost before we can find the break-even point and the margin of safety. Okay, so let me quickly calculate the fixed cost here. How do you find fixed cost? How do you find fixed cost? We learned something today and we are going to apply it. Anywhere, kindly apply it. You are finding for fixed cost. You can use any of the activity level. So choose, fixed cost, if total cost is equal to fixed cost plus the variable cost, how do you find your fixed cost? It will be what? Total cost minus what? Total variable cost is equal to what? Fixed cost. That's all. So pick any of the activity level, whether 2019 or 2020. The answer will be the same. So let's see quickly. So in 2019, so let me take 2019 first. What's the total cost? Total cost happened to be what? 2019. 350,000, right? What is the total variable cost? How do you find variable cost? We said that if the CS ratio is 20%, variable cost to sales will be what? It will be 80%. So if the CS ratio is 20% as stated there, the variable cost to sales ratio will be what? 80. So that the variable cost represents 80% of sales. That's the interpretation. The variable cost represents what? 80% of what? Sales. So therefore, this variable cost is multiplied by 80% of sales. What's the sales revenue for 2019? 375,000. So please, what do you get for the variable cost? 80% times 375 is what?
300,000.
Oh, it's 300,000. So second answer confirmed, right? From the statement that we provided. So therefore, the fixed cost is what? 50,000. These are the questions that we are interested in setting. Before you get the actual answer, you have to pass through nungu or kev. Not straightforward. No. We stop asking those questions. So here, this is the fixed cost. Second, let's assume you're using 2020. What's the total sales? 500. Sorry. Total fixed cost. The total cost is 450, right? So total cost is 450. Let's find the variable cost. Find 80% of this figure. 80% of 500,000. That will give us 400, right? Yes. So that will give us 50,000. Listen, exam, don't do these two calculations. We only mark one and cancel one. Then I use your calculator to confirm that what you provided for us is correct. Okay, so that is it. So have you seen that small question that it was just given here? Look at what you are finding from it. We've not even gotten to the question, no, because I asked for break even. We've not even started break even. Now we have the first cost, 50,000. Now we know the CS ratio. Such question, we can only find break even sales value. We can't find the unit. That's all. Question like this, you can only find what? Break even sales value. You can't find the unit. So let's find the break even sales value. A good examiner should tell you, but I didn't state it specifically. And that is the end of the game. And that is end of the game. So what happened is this. I'm now solving the question. Break even point in bracket value. Let's go the formula. Is equal to fixed cost over what? CS ratio. We have all these details. Fixed cost is what? 50,000. CS ratio is what? 0.2. So therefore, Ghana city of what? 250,000. This answer to, we found it. Confirmed, right? Okay. Now what again they ask? They ask for margin of safety, right? They say we should find for margin of safety. Here in value, you can only find for in value and as a percentage. In value and as a percentage. In value and as a percentage. So this is a break-even sales value. And this is the budgeted revenue. So you can take it from any of the angle. Here we have 2019 and 2015. Sorry, 2020. But we have to end the class. Okay, so first okay, so let's finalize the game. So we are about to end the section. Margin of safety in terms of value. Just find the difference between the budgeted sales revenue. The sales value was 375, right? Break-even sales value is 250. So what is the difference? The difference is what? Margin of safety in terms of what? Value. So 375 minus the 250. Any answer for me? That is 125. Then 2020, 500 minus 250. That will give us 250. Finally, as a percentage, then we are done with the game. As a percentage, you just express this as a percentage of what? The budget. Express the margin of safety in terms of value as a percentage of what? The budget. You get what? 33.33% and the 50% respectively. And that's the end of the game. So with the short question, I'm able to provide all this. Now we are done for the game. This is how far the good Lord will bring us. So we'll end here. But let me give a trial work. You are going to solve question 3B, which is similar to what we've done. That is the May 2012 question. Should be question 5B or November 2012. May 2012, question 5B. So you are trying. No, it's not this question. The one that you have. Because this set you don't have. Good. You are trying question 3B, Abebio. So Abebio plastic. Have you seen it there? That the same section going for 10 marks. So kindly try that one and present your solution. In our next meeting, we are doing multi-products. And then we bring it to a successful end. And high and low. As usual, present some drops on the page. and then you try them. Okay, so if you have any question, kindly ask. If there are no question, then we say this is the end of the game. So I'll give, let's say, a minute for a question. If you do have any question, can or suggestion, contribution. Okay. Okay, then goodbye and then have a nice evening. Kindly subscribe if you have not done that to our page. And share the links to your friends as well. Do the invite. Okay.